Morning, Steve here in Chicago with the morning grain comments. Happy Friday to everybody. At least in Chicago, it's one of those days where you don't have to wear a winter coat or bring an umbrella to work. So it's offering some resistance to the grain markets with this drier weather pattern that should last over the weekend and into early next week. The pattern, though, looks like it's going to change late next week and for the following week going to a wetter pattern. So we'll just kind of see how much planting gets done prior to the change to the weather pattern and how long the wet pattern lasts. Some people think that U.S. corn plantings will be around 64, maybe 68% done by Monday. Beans may be 25 to 27% done. All those numbers are pretty close to what is considered normal for this time of year. We still have a stretch across the southern part of the Midwest in the Ohio River Valley that is wet, and they probably won't dry out before this rain event. So then all of a sudden people are going to have to figure out what will they plant to crops down there, and do they replant the corn that's already been seeded. For the week, wheat prices are down anywhere from 7 to 11 cents, corn down 2, beans down 10. Soybean meal is down about $2 a ton, and while soybean oil is down about 55 points. We started the week buying the grains because of wet weather. And then we sold the grains because the weather is going to turn drier. USDA numbers for 17-18 were pretty much in line with expectations, except they did lower the corn stocks next year worldwide more than people had anticipated. But the bottom line is that we still have too much supply for a rally, and we have record demand that's going to limit the downside in prices until we know more about weather. The grain executives continue to talk about too much supply and just too much grain in storage for the markets to rally, for margins to improve both for the farmer and for the grain companies. It was interesting to note that the report was that the farmland values held steady in key U.S. Midwest states in the first quarter. This is like the first time that prices did not drop over the last 5 quarters. Funds yesterday, sellers of beans, meal, and corn, and they bought a little oil and they bought wheat. They still have a short bean position, short oil position, and near record short corn and wheat positions going into the summer weather pattern. So today we get a private estimate from an analyst group of what U.S. acres are going to be in 2017 and what production might be in the past. They've shown the 17 and 18 bean and wheat carryout bigger than USDA numbers that came out, and the corn carryout a little bit smaller. So we'll see how much that changes. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.